So it looks like Lightning Emotors just announced another partnership with one of the biggest auto manufacturing companies on the planet. In today's video, guys, I want to give you an update on the Lightning Emotors stock, break down the chart for you, and give you an idea of where the stock price could be going over the next couple of months. So let's jump right in. What's up, guys? Welcome back to This Just In. Thank you so much for joining me today. My name is Justin and I am your host. In today's video, I'm going to give you an update on the Lightning Emotors stock. I'm going to give you my thoughts on the partnership with General Motors, and then we're going to get to the chart and we're going to break down the price action. That's really the important stuff that everybody wants to see. I'm going to identify levels that you should be buying at, potential profit targets, and then we're going to see if we can set up a strategic swing trade for anybody that wants to take, more of a short-term position on it rather than hold it for the long term. We'll see if anything is, set up or presenting itself. So make sure you stick around to the end if you want to see that and kind of get an idea of where I see the price going. Real quick, guys, I'm just going to make this video pretty short. If you want to see me go further in depth on Lightning Emotors, what they do, their growth story, the company, I've made many of those videos, so I will link those right here above so you can check those out. Real quick, before we get started, subscribe to the channel if you get any value out of it and you want to see more videos like this. Like it so YouTube sends it out there to more people, and come join us at the Patreon if you want to be part of an amazing family. Day One Squad, I love you guys so much. Thank you for sticking with me over the last month. I know I've been MIA. It's been a pretty rough month, but thank you. I love you all. Let's get started, guys. First thing we're going to take a look at, just real quick, give you my thoughts on the partnership. Guys, Lightning Emotors is an extremely risky, extremely speculative growth stock that, is a very small percentage of my portfolio. I've said this in other videos, but Lightning Emotors, and I've got a handful of these really speculative, high multiple, no valuation, type stocks that I invest into. I'm a young dude. I can handle risk like that. It makes up less than 1% of my portfolio. I do have it in my dollar cost average portfolio, Lightning Emotors, but it's the smallest position in there. So I just want to throw that out there, guys, because these types of stocks should never make up a very large percentage of your portfolio. They should be a very small percentage of your portfolio. I'm not investing in Lightning Emotors because the fundamentals. There is no fundamentals, right? They don't have net income. They don't have free cash flow. Really, all you can look at is revenue growth, and their revenue growth is nice. I am investing in them, however, because I feel like they are kind of a very under the radar, sleeping, type of giant company that is resilient. They're partnering with a ton of, really well-renowned companies like General Motors, that big Berkshire Hathaway deal for $800 million that's in the works that made the stock pop like 80% a couple of months back. Winnebago deal. We'll take a look at the deals, but they also just hit their millionth mile driven by their fleet. So they've got proof of concept. I mean, they've got vehicles out there on the road. This stock has been performing horrendously over the last year. I mean, it's down like 72% in the last 12 months, but it's one of those SPACs, guys. All the SPACs that came out in early 2021, for the most part, have gotten killed. The market is kind of resetting valuations, which is fantastic because everything was so extended, and they need to come back down to earth. But this is something that I plan on holding for the long term, guys. I have accepted the fact that it very well could go to zero. So out of all of the small cap, really risky EV stocks, this is the only one I own because they actually have vehicles out there on the road. Like, they're actually doing business. They're not rolling their truck down a hill for their promo video like Nikola. They're a solid company. Tim Reeser, the CEO, is a beast, and he really does a good job at keeping their pipeline full and keeping those deals coming in. So I just wanted to say that because I don't want you guys thinking that this is like a valuation play or a fundamental play. I do have conviction in the stock because I love the company and I think they're going to do well, but it's not based on fundamentals. So real quick, guys, you can see that they set up the deal with General Motors to electrify their popular medium-duty truck platforms. And then you can see that they announced on Thursday that they have agreed to be the first specialty vehicle manufacturer to provide fully electric Class 3 through Class 6 commercial vehicles. And they're going to be manufacturing at the production facility in Loveland, Colorado, Lightning Emotors facility. Guys, that's really cool that Lightning Emotors was chosen. Little tiny old Lightning Emotors was chosen by General Motors, one of the biggest auto manufacturing companies in the planet. Very, very cool stuff. Not to mention, if we take a look just over the last couple of months, guys, I mean, take a look here. They partnered with Winnebago to do the first all-electric concept motorhome. Very cool. Winnebago's a huge company. Everybody knows Winnebago's that, is familiar with any type of RV. Then you can also see their fleet crosses the 1 million mile benchmark. They also had all new Lightning e-chassis for electric vehicles, commercial electric vehicles. They had the partnership with REV Group to do the electric ambulances, the strategic EV battery partnership with CATL to supply their battery systems. You get the point, right? A lot of really, really cool partnerships. And they've got the ones with the big companies, like the Berkshire Hathaway deal that's like an $800 million potential. But then they've got a lot of other deals with Rev Group and, some of these other smaller companies like Rideco. And so you get the point. I just wanted to give you my thoughts on the General Motors deal. None of the details have been disclosed. We have no idea how much revenue it's going to generate. We have no idea, how many vehicles it's going to be, but we do know that they announced the partnership, and Lightning Emotors is the first company to produce those vehicles for General Motors. So a lot of potential there, guys. Some of these other big companies start to see that, whoa, they did it with General Motors. And, I think this is a very crucial year for Lightning Emotors. They have got to exceed expectations. They've got to beat their guidance. They cannot revise, downward guidance. They cannot miss. They've got to do what they said they were going to do and more, because if they don't, I think they could easily fade away into the shadows and be gone forever. I personally think that they will beat their expectations, and in the next 12 months, they will establish themselves as one of the really dominant EV companies in that class 3 to class 6. And, people will not be able to ignore them. I just think that they're super under the radar. But let's jump over to the chart, guys. This is really what everybody wants to see. We've looked at this chart before. I mean, it looks horrible. It has done nothing but make lower highs and lower lows ever since it peaked out in January at like that $17.36 point. Guys, these SPACs have been getting beat down so bad. You can see here that the most recent discernible event on this chart is the lowest low of the correction. That's not good. That's really bad, guys. A couple of things here that I want to point out, because we could have a trade set up here. Once it broke that inflection zone, guys, back in April, it's just done nothing but chop around in here. It has tested that level as resistance so many times. Here's the big gap up right here on that Berkshire Hathaway deal, but there just wasn't enough demand. It broke the level, tweezer topped and dumped again, and then attempted a rally to back test the 200-day moving average and the inflection zone as resistance, not once, but twice, dumped again. And then you get the law of threes. You get your first discernible high, your second discernible high, which is a lower high, and then your third discernible high, which tested the 200-day moving average and the supply line again, and then it dumped again. So let me show you a couple of things here. You are losing negative momentum on your MACD. You've got Class A bullish divergence setting up. So you've got a low and then a higher low on your oscillator, but a lower low on price. So that's implying a potential reversal. But in bearish conditions, bullish indicators typically underperform. On your relative strength index, you recently just made the lowest levels of relative strength that you've seen since clear back in April. If you take a look here, clear back in April. So, it was super oversold. Look at the weak, really poor reaction you caught off of that General Motors announcement. I think it should have been much, much higher than that, but, whatever. Now, let me show you a couple of things. On the weekly, we've got a confirmed inverted hammer. So that could be a potential reversal signal. We've also got, if we use some wave analysis here, and we go from the low back here in May to the high, where the Berkshire Hathaway high, we are currently sitting right at the 1272, fib extension. But it absolutely could go to the 1414 at $3.25, and even the 1618 at $1.95. So there absolutely could be significantly more downside than where it is right now. But if we use wave analysis, like I said, and we take our harmonics, Wave analysis tells us that when an asset makes a 786, a 78.6% retracement on our B point, and it makes a lower high on C, which is your lower high, and then it makes a 1272 on your pattern completion zone, your BC projection, that's a bullish pattern, right? So we could see the 1414 or the 1618, but this is a level that assets typically reverse over hundreds of years, tons of assets. Patterns like this form, and they potentially, can reverse at these levels. But you don't want to take the trade right away because that's your first time ever testing $4. You got to get what? You've got to get your first low and then your second low. So we wait for the reaction, the type 1 reaction, and we wait for the type 2 reversal. Guys, if this happens, market participants have much more confirmation that the bottom is in, and more people are going to feel better about taking the trade. So that's how you find those low risk trades. You've set your stop loss under the zone, and now you've got much more upside and minimal risk. If this happened, guys, that would be beautiful. You would also be breaking the 200-day moving average and the supply line. And when you get those major levels that converge in one area, you can get some major reactions and significant trend reversals after the fact. So if this happens, guys, you can see it would run, it would come back test, give us the confirmation low, the oscillator would reset, and we would get triple MACD bullish divergence and then class B bullish divergence on our relative strength index. The other thing that we could potentially see, let's just say it rallies and it breaks the supply line right off, and it comes back and back tests the supply line as support. Then we would get what? That momentum shifting structure. We'd get that inverse head and shoulders where you get that left shoulder, you get the head down at the bottom, and then you get the right shoulder. That would really be nice to see. That's what I would want to see. But let me just kind of show you how you would set your trade setup up. If we make this visible on the daily, you would be able to plot your stop loss just marginally under the zone. You can see the price, $3.98 at the all-time low. Set it, 10, 15 cents below that, 380, whatever your risk tolerance is. And then you'd put your first target right here at the initial all-time low from back in April at like 750. Then you'd put your second target at the 618 from the high of the structure to the low. You can see the second target would be the 618 at $9. And then your third target would be the top of the range at $10.50, which would also be confluent with the 786. So you've got a lot of confluence there, guys. I think this is a really nice trade setup that could do really well. It doesn't matter if it only comes back for the, type 2 reversal low. Like if it just did this, it doesn't really matter. Whatever it does, if it gets the, either way, it's a Bulkowski structure. So really nice stuff, guys. I would love to see that happen because, again, if those are the trade setups you're taking where you've got a minimum of 3-to-1 risk reward on your first target, you should do just fine. As long as you're setting your stop loss, you're waiting for confirmation, I'm going to be looking to take this trade. The other thing, guys, is if we jump over, and we were to take the major structure, like we could absolutely be seeing some type of like dragon here. And I've talked about this before in other videos, but you've got the head, the neck, then you've got the hump, and then you've got the tail. So, you've got your supply line, you've got your first foot, second foot, and maybe you get the tail. So, out of the bigger, more discernible structure, who knows, maybe you get like a shark pattern that goes this way, and that would run clear to the 886, which would be way up there. But until we break that supply line, let's just focus on the bullish butterfly and, see what happens. Guys, this absolutely could fail and it could continue to dump. But if it does, and it goes to the 1618, there we go. We even got a better, lower risk trade from there. But let me know down in the comments what you think. I think absolutely in the next 12 months, we could see that $10.50 level again. If you do not own this stock, you gotta wait for confirmation low. If you do own it and you want to average down and you plan on holding it for the long term, make sure you're only averaging down when it will significantly cut your cost. So again, guys, this video is for entertainment purposes only. I'm not a licensed stockbroker. Always do your own research and due diligence. Don't just take my word for it. Come join us at the Patreon if you want to trade setups like this, and I'll see you guys in the next one. Peace.